Welcome back to Dinar Community Channel. They told us the Iraqi dinar would never matter. But when the screens went dark and the world's currencies froze, it was the IQD that triggered the global reset, silently, strategically, and without warning. It started without warning. Across time zones, trading floors, central banks, and financial terminals simultaneously froze. The lights were still on, but nothing moved. Traders stared at screens that hadn't refreshed in minutes. Currency conversion APIs returned errors. The IQD, once dismissed as a speculative token by many, was suddenly unavailable on Forex platforms, blocked from bank dashboards, and missing from data feeds. The world was experiencing something few had predicted in such a coordinated fashion, a total blackout of the Iraqi dinar and several other emerging currencies. What happened during the global currency shutdown still echoes in financial circles, conspiracy boards, and private chat groups around the world. But one thing became clear to all who were watching closely: this was no accident. The first sign came from institutional traders. Several hedge funds operating out of London, Dubai, and Singapore noticed a split-second delay in executing IQD trades. Normally, this would be chalked up to server latency or minor regulatory interference. But what followed was different. The IQD market vanished. Not in a slow decline, but in a full halt. Attempted transactions returned, currency not recognized, or market feed error. Then it spread. The Vietnamese dong VND showed signs of similar freezing. Zimbabwe's dollar feeds were next. By noon Eastern Time, over 20 currencies from traditionally under-leveraged markets went dark. The media, as usual, was behind. News stations ran morning coverage as if it were a regular day, with stock tickers and foreign exchange indicators scrolling across the screen. But by midday, major outlets were scrambling to understand what was unfolding. CNN called it an unprecedented data freeze. Bloomberg dubbed it a monetary anomaly. Fox Business used the word cyberattack, though no evidence supported that claim. Social media exploded. Reddit threads labeled it the reset. Telegram groups from the dinar community claimed the event was long predicted, that a global financial correction was finally happening. Screenshots flooded X and Instagram, showing blocked IQD rates on Wells Fargo and Chase banking apps. A few brave insiders from Tier 1 financial institutions quietly confirmed that IQD buy-sell capabilities had been disabled internally. Some received instructions that morning marked, top priority, suspend IQD interface until further notice. Then came the silence. From global reserve centers to digital payment firms like Swift and Ripple, the standard response became, no comment. But behind the scenes, coordination was taking place on an unimaginable scale. According to leaked messages from a mid-level IMF official, the blackout was not a failure, it was a mechanism. The trigger had been pulled intentionally. To understand why, we need to go back months before the blackout. Iraq had been positioning itself quietly but steadily on the global economic stage. Under the leadership of Prime Minister Mohammed Shia al-Sudani, strategic reforms had been enacted, central bank reserves had doubled, oil-backed deals were signed with China and India, and a long-sought agreement with the World Bank had fast-tracked Iraq's monetary sovereignty. Behind closed doors, currency restructuring was being finalized with help from Swiss financial experts and BRICS-aligned economists. The goal: reintroduce the dinar not just as a regional token, but as a globally respected, asset-backed currency. The signs were there if you knew where to look. In March 2025, Iraq's gold reserves were quietly audited, and unpublicized shipments arrived in Baghdad under heavy security. In May, the Iraqi Stock Exchange suddenly shifted operational oversight to a new regulatory body, reporting directly to the Ministry of Finance. And then came the leak. In early June, a document surfaced, allegedly from the Bank for International Settlements BIS, outlining a Tier 1 reset protocol, involving 5 currencies, led by the IQD. Most dismissed it as a forgery. But on July 8, 2025, the blackout began. All access to those currencies ceased. No trading, no data, no fiat conversions. Rumors began circulating that Tier 1 banks were preparing for synchronized currency revaluations behind closed doors, with non-disclosure agreements issued to employees involved in high-level conversions. Even more shocking were whispers from the Forex community that several test exchanges of IQD had already occurred days earlier at premium rates, some as high as $3.71 per dinar. Private currency holders were left in confusion. Exchange windows closed without notice. Some reported their buy-sell orders being cancelled entirely. High net worth individuals who had previously worked through private brokers found their accounts locked pending internal audit reviews. It was as though the world had paused to reevaluate what a currency really meant. Then came the quiet rollouts. First in Dubai, then in Zurich, and finally in New York. Special exchange centers, by invitation only, began conducting structured redemptions for IQD holders with pre-verified documents. These were not everyday teller counters. These were secure, backroom-level transactions handled by multilingual teams of currency experts, escorted by private security and sealed with biometric authentication. Clients reportedly had to sign non-disclosure forms agreeing not to reveal the rate, the terms, or even the bank involved. Word began to leak despite these efforts. Videos emerged showing bank branch doors locked with hastily printed signs, "Currency department closed for upgrades." A Reddit user shared a blurry image of a Chase transaction receipt showing a 5-figure conversion marked IQD USD, followed by blacked-out rate data. These breadcrumbs stirred more speculation than certainty, but for those who had followed the dinar journey for years, this blackout was confirmation. Central banks, meanwhile, remained frustratingly vague. The Central Bank of Iraq posted a short notice on its website, citing technical recalibrations related to international FX integration. The Federal Reserve declined to answer direct questions, but Chairman Powell made a cryptic remark during a press conference: "We're witnessing a historical recalibration of global monetary valuation systems." He offered no elaboration. The IMF held an emergency closed-door session just 2 days after the blackout, attended by representatives from over 80 countries. What was discussed is still unknown, but insiders claim a new SDR, special drawing rights basket, may have been proposed, with the IQD as a candidate for partial integration based on asset-backed collateral. If true, it would be the most significant currency reweighting since Bretton Woods. Within a week, normal FX activity resumed, but not for all currencies. The IQD feed returned, but with restricted visibility. Many consumer apps like Revolut, Wise, and even Google's built-in converter no longer listed it. Only select institutional accounts saw the live rates, and even they were sworn to secrecy under temporary regulatory compliance orders. The blackout had ended, but the transparency had not returned. For the majority of the world, the IQD remained in the shadows. Yet behind those shadows, the transformation was complete. IQD had quietly transitioned from a speculative asset to a strategic instrument. Governments began hoarding it. Asset managers reevaluated their portfolios. Crypto whales who once scoffed at fiat-based plays began looking for entry routes. Major players like BlackRock and State Street quietly began opening new, emerging asset currency desks, rumored to handle IQD and VND portfolios discreetly. By August, it became impossible to deny. The Iraqi dinar had re-entered the global arena. Its new rate, still unconfirmed officially, was being privately referenced in financial circles as between $3.55 and $4.42, depending on volume and contract rate tiers. Most retail holders still had no access to these premium rates, but redemption centers were slowly expanding operations. Wells Fargo, Chase, HSBC, and UBS were all named in confidential posts as participating banks. Many IQD holders reported being placed on tiered waiting lists for appointments. The open window model was coming, but slowly, methodically, and under extreme control. So, what really happened during the IQD blackout? A global currency shutdown, yes, but also a deliberate, calculated financial reformation. It was not about suppression, it was about recalibration. Iraq, long underestimated, had activated a decades-long plan to reclaim monetary sovereignty, backed by oil, gold, and a new geopolitical alignment. The blackout wasn't a failure, it was the launchpad. And yet, this story is far from over. Governments are still adapting, traditional investors are playing catch-up, and a new class of millionaires is quietly emerging, not from tech stocks or crypto runs, but from faith in a currency that the world once ridiculed. The IQD blackout was the curtain drop and the opening act. What follows is a new stage of global financial history, one where the power balance has begun to shift, quietly, irrevocably, and perhaps permanently. For those watching the horizon, one thing is clear: Currency, in the new world, is no longer just about numbers on a screen. It's about sovereignty, strategy, and timing. And in July 2025, the Iraqi dinar proved it was holding the clock. Like and subscribe for more videos.